At its meeting of the 2nd of February, the board of RBA has decided to maintain the cash rate target and bond yield targets. The central bank also announced their plans to purchase an additional $100 billion of bonds once the current bond buying program concludes in April. These additional purchases will occur at a rate of $5 billion per week. In the rationale, the RBA stated that Australia's economic recovery is well underway and is stronger than expected. The unemployment rate has dropped to 6.6%, retail spending is strong and households have recommenced payments on previously deferred loans. This fast recovery has prompted the RBA to revise their prediction for 2021. The RBA's likely scenario is for the gross domestic product growth of 3.5% in both 2021 and 2022. This pace of growth would mean that by the middle of this year, our GDP would be back to where it was at the end of 2019. But the RBA did stress that the situation is not entirely back to normal. While unemployment rates are improving quickly, they are still at higher levels than the last 20 years. Inflation and wage growth are expected to stay below 2% for the next few years. Another highlight from the press conference is Mr. Lowe's best guess that the cash rate will stay at 0.1% until at least 2024. On the back of this announcement, the national property auction clearance rate jumped to 83% with more than 1,200 auctions. The RBA's plan is for cheap money to keep businesses afloat, which will encourage employment and wage growth, something that the RBA admitted they failed to achieve their targets for. Ultimately, the board believes that the rollout of a COVID-19 vaccine is the deciding factor that will affect Australia's economy over the coming year. A poor vaccine rollout will delay economic recovery, whereas a successful rollout will boost consumer spending and investment.